What up? Michael, how are you?
What's up? Happy birthday.
All right. Yeah. Oh, guys, it's Ritholtz Wealth 12th birthday. What do you get a 12-year-old for their... what would you get a 12-year-old right now if you had to buy a birthday gift?
Probably one share of Uber. All-time highs. Let's go.
12-year-old boy, you'd get him a share of stock. What's he going to do with that?
Nah. All real talk. I'd get him a Steph Curry jersey.
Steph Curry? Maybe Anthony Edwards?
Nah, maybe Steph.
Is a 12-year-old now into Steph?
Yeah.
Yeah?
I don't know.
All right. Listen, I don't know. I don't really know what to get either. Anyway, happy birthday, Ritholtz Wealth Management. 12 years old. Pretty incredible. I was looking at some old photos of how far we've come and how far you've come in terms of the way you're dressing. I just want to point out for the Pounders, Michael is just bodying the fit today.
Dude, it's Tuesday. It's Tuesday. I had to dress up.
You look great. You look like $1 million. All right. Guys, welcome to What Are Your Thoughts? Every Tuesday at 5 p.m. Eastern, Michael Batnick and I go live with the fans to talk about the biggest headlines in the markets, in the economy, all the things that matter to the investors and the traders who watch the show. So great to be with you guys live once again tonight. Want to give a shout out to the Situation Room, who recognized Michael is in a corner office on Bryant Park. That's correct. Bonus points if you could tell me what street. No Googling. Cash King is here. Thank you guys for going live. Hey, this is what it's all about. Akbar Muhammad, Chris Brown, just got that compound Navy trucker's hat. It's the best one. Guys, the hat is available. I can't say forever, but right now, idon'tshop.com. idon'tshop.com. We have the official compound trucker in 2 colorways, and I like both. I rock both. So Georgie D is here, back from vacation. Joe Altamoro, what's up, Pounders? What's up, Joe? All right, all the gangsters are here. We have a sponsor tonight. Let's give a quick shout out to our sponsor, Public. Michael, what's going on with Public these days?
Listen, this is the platform, and this is not lip service. For those who take investing seriously, this is not a gimmick. This is not meme land confetti. This is real deal investing, okay? So if you want to learn about industry-leading yields, if you want to learn about whatever you want to learn about investing, factual stuff, research, trading, go to Public.
So Public doesn't really tell people how to invest. It doesn't sit in judgment of what you do or what asset classes or what strategy. I think it's basically trying to make it so that if you're serious about investing, you have a really great app. And they also have industry-leading yields on the platform. You can still get 4.1% APY on your cash with no fees and no minimums. They're also festooning the platform with AI, which I think everyone's interested in. So
wait, hold on. This is important. So yes, you're right. Go to public.com/whatareyourthoughts /WAYT. This is paid for by Public Investing. Full disclosure in podcast description. I just want to say one more thing on the AI stuff. They're building this tool where you're going to be able to type out what you want. Let's just say that you say, I want the S&P 500, but no Mag 7. Or I want the S&P 500, no materials. Oh my God, it's coming.
Yeah,
unbelievable.
And I was playing with the early version of it. Yannick texted me, and Yannick texted me or Life. Somebody texted me, and I was playing with it. I really think that for a self-directed investor, the combination of a great app, but then the ability to just use AI to ask a natural language question and get the tool here.
Magic.
Yeah, I think it's tremendous. So. Huge fans of the guys at Public, and thank you guys for sponsoring the show. All right, Trump wants to get rid of quarterly reporting. Let's put this up. Subject to SEC approval, companies and corporations should no longer be forced to, quote unquote, report, not sure why that's in quotes, on a quarterly basis. Quarterly reporting, exclamation point, but rather to report on a 6-month basis. This will save money and allow managers to focus on properly running their companies. Did you ever hear the statement that, quote, China has a 50 to 100 year view on management of a company, whereas we run our companies on a quarterly basis? Not good.
Not good.
4 exclamation points. All right. What are your thoughts? Let's start right there. Just
Okay.
on the statement itself.
Oh, I love it. I love it. So here are my thoughts. I did the meme of the girl. Was she drinking something where she went like like that?
I don't
What was
know
she
which
doing?
name you're talking about.
The girl that made several faces, like yes, maybe, and then ultimately no.
She's like puckered up almost.
Yeah.
She's
So
like,
anyway, that's what I went. And within the span of 5 seconds, I said, terrible idea. Wait, actually, and the reason why I said terrible idea is, okay, we need transparency. Okay. Investors need to be spoken to. Now, I understand that these quarterly reports suck up resources, time, financial, and otherwise from these companies. I understand the short-term nature that this allows investors to think every 90 days. So from that point of view, I think we need it. But it is tricky. But if you don't hear from companies regularly, they will lie to you aggressively. So I think ultimately this is not good. But I don't think it's black or white. I think there's sides been made on both sides. Cases been made on both sides.
okay. Why does Trump care about this?
Oh, that I don't know.
Okay. Who's in his ear telling him? And I'll tell you another thing that's bad for America.
Well,
Quarterly reporting.
Here's what I would guess.
Because he didn't come up with this on his own. Out of
Perhaps we need more public companies. One of the reasons companies aren't coming public is because it's a pain in the ass to become public. Get rid of this, ease the burden a little bit, and maybe this was his idea. But I fear that even though it's a distraction, it's a time suck, I think that if we were to just do a semi-annual report, the shit that companies would try to get away with would be so far over the top.
Okay. I sort of feel strongly that they should allow companies to move to a semi-annual, but then don't get upset when investors opt only to invest in companies that give them transparency into earnings and operations at least every 90 days. Like, in other words,
I like that.
What will the multiple be on a company that voluntarily says, you know what, we don't want to tell you what's going on until another 6 months go by?
It depends on the
feel
company.
like there'll be a
It depends on the
disparity.
company.
Depends on the company, maybe. Okay. Say more.
Berkshire investors wouldn't give a shit.
That might be the only company that can get away with it.
Yeah, probably.
Who else would you trust?
Tesla.
Tesla could just never report earnings and nobody would give a shit.
So
They
I
could
don't
just
think it's black. I don't think it's black or white, but this was top of mind for me because I was just listening to Apple in China, which is a phenomenal book about Apple and their growth in China, everything like that. And Tim Cook tried to get away with it. Early in 2018, they were having serious trouble in China, and let's just say that they didn't do a great job being transparent with the investors. Like a month later, bad news came out of China, and they're like, "Wait a minute, we just heard from you." And they were like, "Oh, well, things." They knew, and this is Apple. So if Apple is playing games, and then there's a class action lawsuit after that. If Apple is playing games, you got to hear from companies. So I get that it's a waste and it's a charade, and I get all that, but you need to hear from it. But I do like your idea about let companies decide.
Okay. I also think it's important to point out why we have companies reporting on a quarterly basis. It didn't just like magic. This was not on the tablets that God handed to Moses on Mount Sinai. And then it's just like, oh, we report quarterly because in the Bible. This came about because in the 1960s, basically, that was the early days of the financial scandal. We just had scandal after scandal after scandal and all kinds of mini crashes. And the academics and the regulators and Wall Street power brokers all met and discussed, and the law firms, and they came up with, well, at the heart of this problem is that investors have to wait too long to find out what's going on. There's not enough transparency throughout the course of the year. And a lot of companies are doing things where, we wanted to deal with it till the end of the year. So they're pulling something early in the year, and then they have months to cover it up or hide it or obfuscate it. You can't do that when every 90 days you're putting your results up. It makes it harder to hide things. So we had this thing in the early 60s called the salad oil scandal. It sounds quaint now, but there was literally a company that had tankers that were supposed to be filled with salad oil. Somebody was cheating, filled them with water. By the time it got reported to investors, it was like way too late. A lot of money was lost. It sounds like hilarious today, but this was a huge deal in the early 1960s. It led to a lot of reforms. So in 1970, after a whole wave of these things, I don't remember the names of all of them, they adopted Rule 13A-13 under the Securities Act of 1934. And this was the rule that required a Form 10-Q, which is the quarterly report, be filed with the SEC every 90 days. It took effect in 1971. By no means was this the end of financial scandals, but I do think like we've had this evolution. In the 80s, the way they did earnings reports was press release, and they would send it out to the wire services. If you were a big company, the AP would pick it up. It would be in the newspaper. IBM reported earnings yesterday, right? And then there were fax machines. And then in the early 90s, when we had conference call technology, that's when these things started to become Wall Street analysts sitting on calls with management. You talk first, then we get to ask you guys questions. The format that we know of today really is only a phenomenon that's existed for the last 30 years. And not all public companies were doing these calls and Q&As really until about 25 years ago. We had something called Regulation Fair Disclosure, or Reg FD. And I was new in the business, but I remember when it was adopted. This is the prohibition of selective disclosure of material information to only analysts or big investors. People can't believe this when I tell them, but in 1999, it was perfectly legal for Cisco Systems CEO to call his favorite analyst at Morgan Stanley and say, hey, the quarter is going to be a few pennies light. Like, this was what you paid Wall Street for. This was alpha. You literally were able to have corporate management selectively disclose things to certain hedge funds or certain analysts, and then the analysts would white glove the stock. So the analyst would color it so it's not the end of the world, and they would kind of like gradually walk the stock lower. But the whisper would go out because everyone knew the Morgan Stanley analyst is best friends or plays golf with the CFO of this company, and people just said, oh, Morgan Stanley downgraded it? Well, he's the axe on that stock, and he would know if there's an earnings problem. So that was the world of the 90s, and that's why active management was in its heyday, and people were willing to pay mutual fund managers and hedge fund managers unbelievable amounts of money because it was like a legal form of inside information. So Regulation Fair Disclosure is really being adopted in 2000 is really when the earnings season, earnings conference call, that's when this thing really gets solidified. And we've been living with it for 25 years and nobody's really questioned it. So, I mean, I do like that somebody's like, wait, why are we doing this? I kind of think it's cool. But even if you say, maybe we don't need to spend all this money and time and aggravation, and maybe it's not good for investors to judge 90-day periods, fine. But just remember, these things came into existence for a reason, because less transparency, more scams. Thoughts?
Well done. Golf clap. That was very good. One of the things that I was thinking about as you were doing your monologue is that easing the burden on new companies coming public, we need to hear from them more than ever. I mean, imagine hearing from CoreWeave every 6 months. You could have an earnings report where the stock could drop 60%. So Oracle is one of the top 10 stocks in the world. Its stock went up 40% because there was new information, a $300 billion contract with OpenAI that was not in the stock. And then we got the information, and the stock had one of the biggest one-day moves of all time. Could you even freaking imagine if it was a new issue and you heard from that every 6 months? A stock could fall 90% conceivably.
I think that's such a great point. Like, okay, we're going to ease the burden on corporations, but we're going to amp up the daily volatility, having companies drop these truth bombs out of nowhere after not saying anything for months and months and months. It's not like that's not great for anyone, really.
Yeah, so I don't hate it. I don't think it's like the dumbest idea. So maybe the idea for companies to opt in, but I really am against the idea of just it's semi-annual. Like just a blanket across the board. That I don't like at all.
So we got some guys in the chat saying this is definitely coming from the all-in people and David Sachs.
Oh, yeah, that sounds right.
That sounds right. I was thinking about that because those guys do want to see more IPOs. They're very involved in the venture world. They're definitely hearing from the founders that they back, that they invest in. Like, why would I want to go public and then do quarterly updates? So I think that's maybe true. Some other people are saying, no. This is like a whisper coming from Lutnick. Howard Lutnick, of course, having spent his entire career on Wall Street at an investment bank, could be that too because Cantor Fitzgerald obviously involved at the shallower end of the pool in terms of like small caps coming public and making markets in smaller companies. And yeah, this is a frequent complaint of sub $1 billion public companies. They're being held to the same standards as Fortune 500 companies that have the resources to do all this investor relations shit. Not every company wants to devote 10% of their annual profits into complying with all these regulations. So I like that it's being discussed. It's not one of these things where I knee-jerk hate it, but like deregulation, the whole thing with all forms of deregulation, it's just important to remind people these regulations aren't naturally occurring. They came about because throughout the course of market history, there was a need for this. Now, if you say, well, the auditors are better, and therefore, as long as the auditors are getting reports each month and they're seeing the money, then maybe the public doesn't need to see it that often. I could be talked into that. I don't love it. So I actually don't think anything. Now, that being said, Atkins, at the head of the SEC, he's going to study it. He's going to talk to people, and I think he's going to hear both sides. Funny enough, I think the lawyers that represent public companies are going to say, don't do it, because you're basically taking the cash cow away from them. This is what they get paid for. So it'll be surprising if we ever hear, I don't know if there's public comment or not, it'll be surprising to hear who was against deregulating the quarterly report. Anyway, it's an interesting idea. It's really weird that Trump is weighing in on this, and then an hour later he's got football opinions. It's just crazy. We have a president who's like just omnipotent. Whatever's going on, he's got takes.
He's an ideas guy. He's a take guy. He's a take machine. Okay.
Hey, incidentally, he had a public company in the late 90s that went to zero, DJT. Not the current iteration of DJT. It was the actual casino. Yeah.
Oh, I didn't know it was public. Okay.
It was like a $6 stock. I'm like, oh my God, Donald Trump's has a public company. He's like the richest, most successful businessman in the world. How come it's $6? And the guy I worked for was like, don't buy it. And it eventually went to zero. They were definitely making quarterly reports back then. I don't know if he was involved with running it. I just know it was named for him. And I think this probably goes nowhere, but it'll be interesting to hear the conversation. Would be my final.
I don't like it. I don't hate it. Okay. Adam Butler did a post on Twitter that I thought was timely and noteworthy, and I want to talk about it. It's long, so I'm going to paraphrase and skip a few lines. He said, "Here's a hard truth about modern society: we don't practice capitalism anymore." Skip a few lines. Social media is a canonical example. It's established fact that Twitter, TikTok, Facebook, Instagram, etc., algorithms, which are tuned to maximize advertising revenues via limbic activation and produce political division and derangement, depression, and a host of other problems. But regulating against these algorithms might impair corporate profits, so America doesn't regulate them. Because the system is not designed to protect the rights of Americans to not be exploited by corporations for profit. The system is designed to protect corporations' rights to extract maximum profits from citizens. This is pathological sociopathy at societal scale. So here's where we are, and I skipped a bunch. We built the most powerful resource allocation machine in history, then let it allocate us. We became the resource, the product, the feedstock. If you think I'm being dramatic, ask yourself, when did we last make a major policy decision that hurt corporate profits but helped actual humans? That silence you hear, that's the cancer winning.
I mean, he sounds like Scott. He sounds like my friend Scott Galloway. Scott was basically like, these are the most powerful people in the world right now, the people who control these algorithms. and everything they do is about more advertising dollars. And the very simple way to generate more advertising dollars is to keep people engaged, and nothing keeps people engaged like rage.
Yep.
It's like look, porn works, okay? But these companies are not going to go 24/7 porn. The only major social media network that's allowing pornography right now, throw out Reddit, is X. So Instagram, you can't even show a nipple, and so they're buttoned up there. So what do? Like, how do they like amplify engagement if they can't do naked girls? The way they do it is by making us all want to kill each other. And what's interesting is there's no limit on violence. You can show executions. You could post video clips of beheadings, like the stuff after October 7th, just like women bloody being paraded through the streets. The algorithm will show you those fucking clips 7 million times until you want to go load up a gun and shoot somebody. And there's no limit on it. And so basically we've said, like, okay, no porn other than X, but unlimited violence. And maybe every once in a while we'll put a little warning thing that somebody just clicks through. But no check on it whatsoever, no age limitation. Anyone can see anything.
You saw I didn't watch this. I assume you didn't either. But there was a beheading last week. That's all over the internet.
I don't do social media, so I don't see any of that shit. And I'm going to tell you right now, I quit Twitter. I was on Twitter, I would say 7 hours a day for 10 years, ish. And I quit in 2020. It's 5 years ago. And every time somebody sends me a tweet, yo, look at this. Oh, this is so funny. Listen to this stand-up comic. Look at this, like, I don't know, baseball play, whatever. I go to it, I watch the thing, and then immediately under it starts populating the most vicious, disgusting, racist, violence-fomenting content I've ever seen. And I immediately click away, and I'm like, holy shit, I can't believe how much time I used to spend here. I think it's gotten worse. I think most people would say it's gotten worse. It didn't used to be this way. But like that's where these companies make their money. They have to keep you on. They have to keep you coming back. And the way to do that is to constantly trigger your central nervous system, like your amygdala. It wants you to feel rage and fear and anger, and it wants you to take sides and join a team. And now we got kids that are doing this from the time they're 8 years old. Now they're 22 and they're fucking shooting people. And I don't like corporate profits are at an all-time high. Hooray.
Yeah.
It's bad, dude. You got teenage
society
girls who hate themselves at 13 years old because the algorithm is showing them girls that are skinnier than them. None of it's good. And listen, I use social media. I guess right now, technically, we're on YouTube. This is social media. And I would not say that all of the evil fully outweighs all of the good. A lot of good has come from connecting the world, my own career included. I think Adam Butler is exactly right. And unfortunately, the money is flowing. And they're going to use us being at each other's throats to fund this AI build-out. That's the reality. That's what's happening. And unapologetically. And it gets worse every year. And now the people who control these platforms, they are best friends with the president. So, maybe you want to solve this. It's not going to get solved right now. Maybe another era.
I saw a reel on Instagram where a woman's house burned down and she's like walking through the ashes and she looks into the camera and says, "Do you need the best soap for scrubbing burned down houses?" And it was like, what?
Dude,
Staged or otherwise, it's so demented.
There was a guy at the university in Utah right after Charlie Kirk was murdered. There was a guy who looked into his phone and started promoting his channel.
Yeah.
Like everyone around him is running for their lives. There's no way of knowing if more bullets are coming. This guy is into his phone promoting his channel, live streaming the chaos of what's going on. Like, we're now at the point where it's more important to please the algorithm and get likes and engagement than it is to run for our lives in the middle of a shooting.
So
It's-
nothing.
I don't know how to explain it.
Nothing pleases the algorithm like rage and depression. And I think this is helped fueling the big disconnect that we talked about a couple of weeks ago, where it's like people think that the world is going to hell economically. People think that everybody's getting left behind. And it's just not true. And you have to resist the algorithm. Are there people that are struggling? Obviously, that is always the case. Always. Yeah. But the disconnect between what you're seeing from the headlines and what is reality is so mind-bending because it's the algorithms. It's not real life. So let's move on to this chart. For example, this goes to the corporate profit piece that we're saying, like corporate profits at all costs. All right, so U.S. nominal GDP, which is a better representation of the overall economy.
This is so
versus
good.
The gap between that and the operating margin of the S&P 500.
What are the Mike, what are the two different y-axes? So the blue on the left is the operating margin percentage.
Now listen,
so it's like 15% now?
Yeah, so what it's actually measuring is less relevant than this. Just look at those lines, okay? They used to track basically one for one.
Yep.
And I don't know exactly what happened 2 years ago, but the gap is real and it's growing. And this is not made up. This is not the algorithm. But I want to make the point. This is very important. It's not as if, chart off please. It's not as if the corporations are doing amazing and the average citizen is just getting fucked. It's just not true. It's not true. Listen to what these companies are saying on their quarterly reports. They have no incentive to lie. So I pulled this from the transcript. This is from Live Nation. I think every quarter for the last 12 quarters, I've been asked what's going to happen in the U.S. when the consumer goes away. You guys are too far over, right? And so for the same 12 quarters, we've said things are going fine. This is from Urban Outfitters. We just have not really seen any weakening in the consumer right now. We feel good about the macro environment and the consumer, despite headwinds and tariffs and all sort of headlines that are out there. This is from Tractor Supply. From our view, the consumer is healthy and resilient, remarkably resilient. Josh, just before we came on, Sarah Eisen tweeted, what did Sarah tweet? She said, financial services companies in the payments and loan space, okay? And I think these companies see the consumer, are saying consumers are doing better than you think.
They might know something.
They're doing better than you think reading the papers. Ally Financial, Bank of America, they're all saying the same thing. And I'm not saying, again, yes, there are people that are struggling. But this idea that like it's only the rich that are doing well and everybody else is getting left behind, it's just not true. It's the fucking algorithms. It's not true.
So there's a few things going on here. The first is ignore surveys, focus on data. All of the credit card companies are putting out tons of data all the time on earnings reports, in between earnings reports. They're literally telling you what's happening with actual spending on debit and credit cards.
Data
is so much more valuable than a survey. You could ask people, how do you feel about the economy? And they could give you an answer that is entirely colored by whatever else in their life they're pissed off by. And what you're going to come back with as the surveyor is, oh, they're unhappy about the economy. No, they could be they might hate Biden, or they hate Trump, or they hate their local congressperson, or they just read an article about somebody's teaching their kids something in kindergarten they weren't happy with. Like, they could be angry about anything, and then they're telling the survey that they're pessimistic about the economic outlook. It's not data. It's vibes. It's feelings. It's irrelevant. It's a huge waste of your time.
And also, if you're on the algorithm for 8 hours a day, how do you think you're going to feel about how things are going? How do you think you feel?
Worse every minute. It's like whatever the opposite of Zoloft is, that's X.com. Worse every minute you spend on it, it's worse. Here's the actual reality. The XRT, which is the retail sector ETF, is up 11% year to date. 63% of the companies in that index are above their 50-day. 73% are above their 200-day. So there's not just Walmart going up, okay? If you actually look at what was reported on retail sales today,
great numbers.
0.4% month over month, 3 months straight. Spending is actually re-accelerating after it stalled out in the first 2 quarters of this year. So you could take that And you could take a survey where some old man picked up the phone and vented his frustration about inflation into something that the surveyor takes as gospel about how the consumer, quote unquote, feels. It's bullshit. And the way you know it's bullshit, try to book a flight somewhere. Like try to stay at a 4 or 5 star hotel during a holiday. Like anywhere you look, there are people
You're
that
out
are
of touch.
gleefully spending money.
You're out of touch, Josh. I'm kidding. Although you are out of touch. But listen to what these companies are saying. Salt of the earth. Yeah. Josh is the only one going on vacations. Listen to what Ally is saying. They don't serve they're not American Express. Okay. All right. Now it is also true that obviously it is a K-shaped economy. There's no doubt about it. So there are people that are doing better than others, as is always the case. But particularly today, I saw a great chart showing that the top 10% of income earners are now responsible for half of spending, which is up from 35% at the turn of the century. So yes, both things can be true. And this is a really interesting chart that I had not considered as to why spending seems to just be up and to the right. Look at this chart from Variant Perception. So look at the red chart. Now it's projected out into the future, but this is up and to the right. And what we're looking at for people that are listening is retirees. So 65 years and older is a total percentage of consumption. They say retirees continue to make up more and more of U.S. consumption. They're less sensitive to job market feedback loop, although still sensitive, of course, to wealth effects from home values, et cetera. But these people that are retired,
they have all the money already. Yeah, so that's
it doesn't matter what the labor market is doing.
That's a really great chart. If you're 55 to 64 years old, the state of the labor market is not the relevant thing. The relevant thing is, what is my house worth? What is my stock market / retirement portfolio worth? And the answer to those two questions is just endlessly up and to the right. The third question is, do I have the wherewithal to borrow, use credit card debt, revolving line of credit? Can I basically, at this point in my life, do whatever I want? And for tens of millions of households, that is basically the case. Not for everyone. So for those people, the ups and downs of the weekly jobless claims, this is not the thing that's driving their decision making. Because it's not the thing that's driving their ability to spend. It's how wealthy they feel. And so this booming stock market is producing economic growth for that cohort of the economy, and it's a big cohort. Look, for 50 years, we yelled at people in this age group, or 50 years, 30 years, yelled at people in this age group, save, 401k, 401k, 401k. It worked.
Yeah.
And you could say it was a self-fulfilling prophecy because you start out with 30 million households that are using 401ks to save, and then you get to 60. So now all these new households buying in are just pushing stock prices up higher for the people who got in 10 years before. Tough shit.
Dude, that's how life works. Guess what? I paid a lot more for my house than Zolot did. That's the way it works. And this demographic warfare, people are upset that the boomers have all the money. They're 70 years old. Guess what? When we're 70, we're going to have all the money. How do you think compound interest works?
And when we're 70, we would trade a lot of our money to be 30. Like a lot of it. Many 70-year-olds would trade all their money. Put me back
don't
at
be jealous
30.
of the
I'll figure it out. You don't want to be. You don't want to be there.
You'll get there.
All right. This was interesting. MicroStrategy. I know we're calling it strategy now. I'm sorry. Apologies to Michael Saylor. Denied entry into the S&P 500, despite meeting.
Really?
Yeah. And I didn't see this reported that widely because maybe they'll just fix it and they'll let him in eventually. I don't know. This is
the Isaiah Thomas meme. I met the criteria, but I wasn't selected.
All right. So it's important to point out, this isn't like a government thing. This is Standard & Poor's, S&P global indices that make these decisions. It's a committee. We actually had Sam Stovall on our show. He used to be the chairman of that committee. And they meet periodically and they look at public companies that have grown very large and they make decisions. Does this company meet the criteria for inclusion? Famously, the biggest issue they've ever had was Tesla. Because Tesla became like a $200 billion company with no profits. And one of the things that's required for index inclusion is like 4 consecutive quarters of positive earnings. And Tesla just was so outside of the traditional bounds of that they had to consider it. They did wait, and they famously added it way after people had made so much money. It looked like they were adding it at the top.
Is it a strategy in a very similar situation? Does their operating business make any money? I think it made I'm making this up. I don't want to throw out a number, but it made very little. It makes very little money.
Yeah. So that's the thing. It's It's like a investment company more than it is an operating business. They do have a very small software subsidiary that's not really relevant to the stock price. It's like the remaining kernel of the original business that we used to call MicroStrategy. But like, I don't know. I feel like it's kind of a big deal. JP Morgan weighed in on this, and they said the S&P 500 Index Committee's decision to reject Strategy's inclusion represents a significant setback for corporate crypto treasuries. Quote, last week, the S&P 500 Index Inclusion Committee rejected MicroStrategy from being included in the most prominent equity index in the world. This is signaling that the committee, which can apply discretion in its index decisions, is concerned about including MicroStrategy that's effectively a Bitcoin fund. The bank argued the rejection is a blow not only to Strategy, but other corporate crypto treasuries that have proliferated in recent months in an attempt to replicate MicroStrategy's crypto accumulation model. So maybe, well, it did get into other indices. So JP Morgan noted it's in the Nasdaq 100, it's in the MSCI USA, MSCI World, Russell 2000, and the CRSP US Total Market Index. CRSP is what Vanguard uses. They don't necessarily use S&P. But I don't know. Do you think this matters to anyone?
I mean, it matters in the sense that Strategy is not a small market cap, and so inclusion in the S&P 500 would give it more dollars invested. But what's interesting about Strategy, more so than the inclusion or lack thereof, in my opinion, is the weakness in the stock relative to the strength in Bitcoin. Like it's not the shine is off. And I don't know if it gets it back. Maybe it will, maybe it won't, but it's not hot right now.
So is this, I haven't been following that closely, but is this the Jim Chanos investment thesis where he went long Bitcoin or a Bitcoin ETF and went short Strategy? And his idea was that like the gap, the Strategy will not keep its premium to its NAV. And so being long Bitcoin is a hedge against missing out on Bitcoin going to $1 million. All right, so it looks like he's starting to be right.
He's saying like, I don't want to be short Strategy because if Bitcoin goes up 1,000%, Strategy might only go up 500%, right? So so in the last 6 months, Bitcoin is up 37%. Strategy is up 10%. Let's show the next chart. So this is basically Jim Chanos' trade. Next chart, please, Okay. So he is betting that this chart breaks down. He is betting that this chart breaks down. And what you're showing is that the outperformance of MicroStrategy relative to IBIT peaked in November 2024. And I believe that's when IBIT listed options came on the market. So Strategy was working because if you wanted exposure, I mean, it was working for various reasons, but if you wanted exposure to crypto and you couldn't own it and you wanted levered exposure, you couldn't get it. Well, now there's plenty of options. You could literally buy options. And so if this thing breaks down, and boy, is it hanging on support, it sure looks like it's going to break down, then Chanos is going to make a lot of money. If it rips in his face, then he'll lose, then he'll lose money.
Okay, so we now have 5 digital asset trusts, right? We're calling these DATs, 5 of size. There's probably dozens because everyone's imitating everyone else. You have MicroStrategy or Strategy, which is $74 billion in value. I don't know how much Bitcoin do they own, or is that the amount of Bitcoin they own?
That's the amount of Bitcoin they own. Pretty remarkable.
So how big is the market cap? Is it double?
Is it $1.50? I mean, that's huge.
Yeah. Okay. The next one is Tom Lee. Bitmine Immersion Technology, which is ETH, but I think they also are buying other crypto tokens or coins.
It's ETH. It's ETH.
It's like $9 billion worth of ETH.
All right, hold on. So Strategy's market cap, sorry to cut you off, but Strategy's market cap peaked at, let's see, it peaked at 130. It's now down to 95.
That's a lot. That's a lot of lost market cap,
especially in a Bitcoin, especially in a bull market.
Right. That's with the price of Bitcoin rising. Okay. I would be. I'm not in this. I'm not in the trade. I'm not shorting it. I'm not involved in it at all. I would be terrified right now. Because if you get a bear market in Bitcoin, which happens all the time, just a normal run-of-the-mill bear market, if this thing's underperforming on the way up, what the hell is it going to do on the way down? I don't know, but I would be nervous. I just lost an AirPod. All right, we have Bitminer Immersion, which is ETH, and then we have Mara, which is $6 billion worth of BTC. It's also a miner. This is one of the original.
Sucks. So IBIT is up 25% year to date. Mara is up.
I'm going for this AirPod.
Keep talking. Go ahead. Mara is up 4.5%. If you guys are interested in learning more about these treasury companies, our friends Straza and Alfonso did a killer video on YouTube. I watched it the other day, talking about a lot of these companies are pivoting to AI, and not just like an LOL pivot, because they have all of this compute power and know-how. So Riot, for example, Riot is one of the companies, the original block mining companies. Riot has pivoted to AI, and they're up 71% year to date. They are on fire. No, it's not funny. It's for real.
Yeah, I know.
It's not just it's not just a name change. They're like actually doing shit.
These are all sandcastles. The wave is coming. All right, SharpLink Gaming, SBET. So I've never heard of this.
Me either.
$3 billion. Again, if I were on Twitter all day, I'd probably know all about it. But I'm living my life instead. $3 billion in ETH, and then the last one, Metaplanet, $2 billion. Is this Japanese?
This is the one. I love this one.
This is the one.
I don't know. I don't know what this is.
Why is it called Meta? Wait, what's the ticker?
Wait, is this the company that was mining ETH on Mars? I don't know.
Oh, why did you say so?
Yeah, I don't know.
How quickly can I get long this stock? Okay, so look, and then of course we don't have Dan Ives' thing, but Dan's thing is for WorldCoin, and I don't know what the market cap is. I'm sure it's $900 billion. But like, if the biggest one of these and the most established is not going to be blessed with an index inclusion by S&P, could that potentially change as people get more accustomed to the fact that these exist? Or B, do people just say, we don't care if it's in the index, we really believe in this strategy of issuing shares to buy more crypto until this company corners the market and gets 5%, which you think it's version 2?
Yes. No, I think yes to both. I don't think anybody's buying strategy. I'm sure there are people that were front running this, but I don't think the actual thesis of strategy is not to be included in the SP 500.
Somebody named Yokubu Tenshi says Metaplanet is a tax loophole for Japan. All right, I got to dig in there. I have no opinion. Okay. I got to. I got to dig in there. I'm not going to say any more on this. Okay, what happens after rate cuts, Michael?
You tell me.
Okay. I don't know if you guys saw this thing I did with Nick Colas yesterday. It was really good. I just want to replay his chart really quickly. This is every rate cut over the last, since 1990, by size of rate cut. Have you ever seen this before?
Nope.
Okay. So we've had 33 25 basis point rate cuts, 18 50 basis point rate cuts, and only 4 75 or 100 basis point rate cut. You could basically see that all of these 50s, with the exception of last year, took place during a crisis, like real deal crisis, like 2001 and 2008 and 2020. So Nick was making the point, we really don't want to see a 50 basis point. It's almost 96% chance, I think, right now, based on chart off, based on the betting markets, that tomorrow, Wednesday, we're going to get 25 basis points. Where are you with this?
Listen, 96%. I don't want to fade that. I'm not going to zag just for the sake of zagging.
No, like where are you on like how much is that priced? I know it's priced into the bond market. You think the stock market, we get that, probably very little reaction. What if he zags, dude? What if he's nah, I'm good.
You know what doesn't exist much anymore? People don't sell the news. You know why? Because the news is so thoroughly disseminated and ingested. I mean, it's possible that we sell off because, why not? But like, sell the news is sort of an ancient thing.
You mean like sell the news as a buy the rumor, sell the news, like as a tandem thing?
Yeah.
Well, so the shortcut is to not sell the news, because if you just stay long, then de facto you've bought the rumor of the next thing. So why do anything ever at all? All right. Anyway, I thought that was a good point Nick made. Let's pop this chart. Returns after the first Fed cuts. So this is like our data now. This is our stuff.
So on
walk
average,
us through this chart.
So Chart Kid Matt shows that on average, the S&P 500 is up 9.6%. A year later, 2/3 of that is from multiple expansion. The other third is from earnings growth. But of course, average here sort of hides what the truth is. So let's show the next chart. This is the forward 12-month return broken down by individual rate cuts. And it's, it's sort of all over the place, more up than not, but some bad ones in there.
Wait. Let me just ask you a question. So this is showing the dates of the initial rate cut of the cycle.
That's right, Josh.
Like, that's the starting point?
Yes, and then the diamond is the drawdown, max drawdown 12 months later.
Okay.
Versus the average and the 12-month return.
So what's the takeaway from this?
This is not satisfying, but it's mixed.
Right. So there's no concrete narrative of we start a rate cutting cycle. Oh, and by the way, is this the start of a rate cutting cycle or a continuation of the cut from 9 months ago?
I think it's new. But yeah, no, fair point.
It's new.
Listen,
I don't know.
I think this current environment is so weird. I still think with the mashup of AI and hyperscale spending, of tariffs and whatever's going on there, of vibes, of demographics, of a post-COVID world, like this is a very odd market, coupled with the fact that we've had this really strong bull market amidst a rate hiking cycle, and we're rallying before rates are even lowered. But like this idea that stocks are going to sell off like materially, that the first rate cut is going to be the top.
Dude,
I sort of find it hard
that's
to believe.
it. Like we're writing the book right now. The book does not exist. I wish I could say, oh, this is just like the 1957 to 1968. We're writing the screenplay.
Yeah.
Like right this minute. So I
you'll
totally
like
agree
this.
with you.
You'll like this. David Kelly had a good take. He was talking more about like the actual impact on the real economy. Forget about the stock market. And he had maybe a bit of a contrarian take. He said the first and most important impact of lower interest rates on aggregate demand comes via its impact on household discretionary income, and it is negative. This can be seen by looking at household interest, income, and expense separately. On the income side, households had a total financial assets of $125 trillion, 14 of which were held in deposits. Assuming that all of those were fully impacted by the Fed easing, a 1% decline in short-term interest rates would reduce annual household income by roughly $140 billion. Now,
yes.
Now, hold on. The $140 billion is not all spent, obviously, but he makes a point that even if you were to compare that with the liability side, a lot of the liabilities are fixed in nature, and the assets dwarf the liabilities. So if you look at that, I thought you would like that part. So he said that a 1% interest rate reduction across the board would reduce annual interest expense by $30 billion. So $140 billion
minus
$30
billion. $90 billion.
But
billion in spending at risk.
But wait, the truth is that those don't net each other out, because the $30 billion in interest expense, that's money good. That is money that's being spent, okay? The $140 billion, it's Jeff Bezos earning another $1 billion a day. You know what I mean? Like, it's not the same.
All right, I get that, but still, I just want to take this moment to point out, this is one of my best calls ever. 5% overnight rates, risk-free, were a stimulus for the economy. They were a stimulus. for the top 20% of households that own the whole stock market, own the whole bond market. They had never, ever felt richer than they did when they checked their 401k, record high stock prices. Then they checked their savings and checking account at the bank and saw a geyser spewing more cash into their accounts.
You're not wrong, but you just mentioned a key component of this. They saw the 4% cash ends in the stock market at all-time highs. If the stock market, if the 5% or the 4.5% interest rates crush the stock market, the income would feel like a drop in the bucket.
Fine, but it's mental. It's not.
You're right.
The dollar amount of the income, to me, is not the thing. It's the wealth effect produced in someone's mind when they see that not only are they making money in their real estate, their stock portfolio, the value of their small business, then it's like, oh shit, my money market funds are paying me 4%.
Yeah.
I'm taking my whole family to the Sphere to watch the Backstreet Boys. I'm doing it. I'm doing it right now. I don't give a shit. My money's making money. It's been 15 years since people were able to say my money makes money.
Fact.
Okay. So I really felt that way. What's this wall of worry graphic? Let's put this thing up.
So we were talking last week, 2 weeks ago, about is the AI sentiment survey data just garbage? And I think a lot of survey data is, but man, this is not noise to me. This is signal. So here's what we're looking at. ChartKid did this wonderful thing where he showed what happens on the left. This is the average path for 22 weeks, which is where we are today, when the S&P 500 rallies 20 to 30%. Obviously, that's a gray line. It's up and to the right. And what happens, of course, every time is that the average change in bullish sentiment is also up and to the right. When stocks are going up, people get more bullish. Duh. However, what we saw in this current example is a ridiculous rally, very fast. People got left behind. And the current change in bullish sentiment is flat. This is remarkable, dude. And I know that the AAI is a certain segment of investors. It's not the entire population.
It's old people.
But be that as it may, dude, the S&P just rallied 30% to 22 weeks and no bullish change in sentiment. Nah, I don't think so.
Throw it out.
Nope.
Update your data set. Okay, don't throw it out. Create a tapestry of different sentiment survey data sets. Go talk to Robinhood people.
You don't talk to anyone. You don't talk to anyone. You talk to me.
People.
You talk to me.
No. I mean, if you're a surveyor.
Okay, fine. So listen to this.
Stop calling people at home.
Okay, how about this?
Who have to put their dentures in to answer your survey questions.
Schwab has this report that I mention all the time called S-Tax or Stacks or whatever they call it. And this is quantitative. This is not a survey. And the last 4 months, there's been barely any rebound in activity. Actual activity. People are not euphoric. They're not even bullish. Now, obviously, don't talk about open. Yeah, there's pockets. Okay, I get it. But there is still a lot of doubt about the sustainability of this bull market. There is. That's a fact. I'm not making that up. People are doubting this bull market.
So that's bullish.
Yes.
I like that. All right.
Let's move on.
Last thing I wanted to get to. The Nasdaq just announced they're going to tokenize every stock that trades on their exchange by the year 2026, I think.
Big deal.
Do you understand what they're saying or no?
So I read the report, and there wasn't a lot of why.
The
post.
It was their post. It was like their press release.
Yeah. So it was a lot about how the blockchain rails are better. It's coming. Listen, you might not like it. You might think it doesn't make sense. You might question it. It is inevitable.
The integration, this is NASDAQ writing, the integration of tokenization and blockchain tech alongside traditional market infrastructure presents an extraordinary opportunity for the system. These capabilities have the potential to deliver profound benefits to issuers, investors, and economies globally through reduced frictions. I like that. Accelerated settlement times. Everybody likes that. Automated processes, of course, and improved efficiencies in capital and collateral management. I am excited to share that we have submitted a filing to the SEC to facilitate the trading of tokenized securities on the Nasdaq stock market. I don't know if that means they're going to say to the issuers who list on the Nasdaq, we are going to create a tokenized version of your security, and we'll do it safely, and we'll test it, and it'll be ready in a year. Is that what they're saying?
I have a lot of questions. I don't know how it's going to work. I know these are not derivatives. They are actual tokens that represent shareholder voting rights. Like these are real shares on the blockchain. I don't know. I have a million questions. I don't know. But this is coming. And think about I'm not an expert in this market structure by any means, but ADRs. And think about all of the inefficiencies, the roadblocks, the hurdles for companies trading around the globe. This is all coming.
There's a guy named Simon Taylor who writes something called FinTech Brain Food, and he went out of his way to point out how different what Nasdaq announced was from what Robinhood announced. So he's basically saying Robinhood created tokenized stocks, which basically were derivatives. You own a claim on a claim. It's a SPV or a special purpose vehicle wrapped around a stock. The redemption rights are controlled by the SPV holder. So in other words, if Robinhood goes under, that's who you're in business with. That's your counterparty, not the corporation that issued the stock. They just put their own wrapper around it. That's not what Nasdaq's saying. Nasdaq is saying we're actually tokenizing the actual equity. So you keep your shareholder rights. We're not stuffing the equity into a token and then selling you the token. We're making the equity the token. I thought that was interesting. You keep your voting power, you get your dividends directly, and the only thing that changes is it's on blockchain rails, which is the less friction, faster settlement part.
Where does this custody, is this you have to have your own wallet? I don't get how that's going to work.
He's saying the infrastructure, I'll just quote him, DTCC's app chain built on enterprise Ethereum using ERC-3643 standards. I don't know what any of that means.
I understand. Say no more. I get it now.
Accenture, Consensus, Citigroup, MasterCard, Santander, and Visa are all backing this working group. What this means is 24/7 trading around the world, instant settlement, programmable ownership, access to U.S. equities for anyone, anywhere in the world. And I guess the way that he wrote it up is it's a really big deal. And all of the comments are all these other fintech nerds, and they seem to be going crazy for it. So, I'm not going to do this thing where I'm no. I'm going to say, yeah, all right, it's the NASDAQ. It's not a fly-by-night organization. It's not a broker-dealer. This is one of the most important exchanges in the world. You think they're going to destroy the stock market with a new innovation? I doubt it. So I'm gonna let this one breathe, and we'll see how it goes.
We could look back in 20 years and think obviously when you look back, there's a lot of revisionist history, right? Your memories morph into what what you wanted to believe or what you want to believe you believed back in the day. And we might think this was so obvious. Obviously technology was going to get better. Why would you not think that technology was going to get better? The financial rails of today were built in the 70s. And I was listening to, my God, I'm getting annoying with this audiobook stuff, but I was listening to Chuck Klosterman. He wrote a book called The 90s. And during the internet, the early days of the internet, and even in 95, people were what is this digital internet? What is this digital highway?
Yeah.
And now people look back and laugh how naive I was, and we might do the same.
Not everything from that era though ended up turning out to be true. So we only have the winners to look back and say, oh, this was so obvious. But I have the benefit of hindsight because there was a controversy early on when I started in the business, which was the decimalization of stocks. So my first 2 years as a stockbroker, we were trading stocks in eighths and quarters and 16ths, which we called teenies. And they wanted to make every trade go off in a penny. And right now, now we take that for granted. But back then you would sell a stock at 3 5/8 and hope you could buy it back someday at 2 1/4. And getting rid of that was super controversial. People were no, don't do that. Why would you do? They ended up wiping out profits for the market makers for about 15 years until Citadel came along. They wiped out small cap broker dealers who needed that eighth or that 16th in the spread to justify writing research on all these companies. They killed the IPO market. It was not without its casualties, but I think most individual investors would say this ended up being a great thing because the bid-ask spread is now a penny. And it used to be 30 pennies. And that adds up when you're doing big lot
So
trades.
can't we look back in 10 years and be like, could you imagine that like markets used to be closed like just because people needed to go home?
Yeah. I listen. That's why I want to hear more about the Nasdaq. Like, what is the Nasdaq?
You're going to.
And why does the Nasdaq think this is good for them? Most importantly, why are they leading the charge? It can't just be innovation for innovation's sake. There's got to be some money to be made here. So I want to know what it is.
Yeah, you're going to.
I have an open mind.
Okay.
All right, you're up. Make the case.
I'm going to make the case. I'm moving, as you know, and
Not to brag. You bought a beautiful home. I'm so proud of you.
Thank you. So I got home on Wednesday night at midnight. At 6:30 in the morning, Robin woke me up and said, "Let's go. Get out of bed. We're moving." And for the last 5 days, it's been nonstop. My national grid wasn't turned on, so I'm taking the kids back and forth to shower. We can't shower at our house.
Oh my God.
And then yesterday,
that would never happen with sprinkles in charge.
No,
just
I know.
saying. No chance.
I know.
Okay.
And on Saturday or Sunday, I had 2 hours. Robin was with the kids or whatever, and so obviously I'm at my computer doing work, and I'm getting caught up because we've been off for a few days at Future Proof. And what's so funny?
Adam said your new house is 90% mudroom, 10% house.
It's true. And I thought to myself, and there's a reason I'm telling the story. I thought to myself, I'm a fucking maniac. Like, I have 2 hours and I am absolutely going hog wild on a beautiful Saturday afternoon, catching up on emails, whatever, preparing for this week. And I thought to myself that quote, and then I realized, like, I connected it with this. I was listening to Karen Seidman Becker, excuse me. She was on Patrick O'Shaughnessy's podcast maybe 4 or 5 months ago. And she said the quote to somebody that rejected her or passed on her company. The company's clear, by the way. Like, why are you going to win? And she said, because I am a fucking animal. And so as I was thinking about that to myself, doing work on a Saturday when I had a minute, I thought about her. And I said, oh shit, I meant to buy that stock. And I don't even know if Clear is a good business or not. Like, I don't care.
Clear
but
is the thing at the airport that they
Yeah.
convince you to do because TSA pre is not fast enough.
But she was so beyond impressive. I texted Patrick, like, she is amazing. And I meant to buy the stock. I forgot to buy the stock. I pulled up a chart to see what was going on. And I said, so pull the chart on. Pull the chart up, please. So
Ripping. Wait,
the
why?
stock-
Why all of a sudden? It had such a horrible debut.
next chart, please. This is the free cash flow and the revenue. The business is doing phenomenally well. That'll do it. So I haven't dug into the fundamentals. I'm going to listen to the most recent call and find out what's going on. And I probably still want to buy, still will buy the stock. So my point is, I wanted to bet on her and I just forgot to buy the stock. And when you've got like just amazing special people like this, you just got to bet on them.
Just like pure jockey.
Yeah.
See, it's interesting. And I think this is why you've gravitated a little bit more than I have to like private market investments and venture-backed companies, because that's the whole ballgame. There is no business. There's an idea of a business. You're betting on jockeys. You're betting on the people.
I was talking
and
with my friend
you
today.
like that.
I was talking with my friend today about one of our mutual companies that is crushing it. And I said, like, whatever Rob's doing, my answer is I want to give you money. I don't even care what you're doing, but I believe in you.
Okay. So you're a big like management guy, bet on the person guy.
Huge.
Okay.
You know what?
Right.
Last thing, and then I'll shut the fuck up about, excuse my language, about these audiobooks. So Steve Jobs, listen to this quote. Now, you know what? I feel like my brain has been deprived of oxygen because I haven't read a book in 3 years, because I don't have the mental energy at the end of the night.
Remember I told you that was going to happen 10 years ago?
My brain shuts down at 8:45 and I go to sleep at 9:15. I am wiped at the end of the day. I can't physically read. And I don't care if it's cheating. Fake reading is better than no reading. And I feel like I'm alive again with these books. So anyway, Steve Jobs said, just talking about like people, Steve Jobs said, it doesn't make sense to hire smart people and tell them what to do. We hire smart people so they can tell us what to do. So you're goddamn right. I'm all in on these people.
All right. Listen, I don't hate it. I was all in on you when I met you. So hey, you're getting torn to pieces in the chat.
Awesome.
In a nice,
Thank you. I appreciate
my
that.
Super Savage Spirit says Michael looks like a rich bald CEO right now.
I'll take it.
That's not bad though, right?
You know what? When I was 26 years old, I made $900 for the year. Okay? And when Josh hired me, I made $36,000 for the year. So I will take
don't reveal my methods of enticing people to join it.
12 years ago, okay? So I will take rich bald asshole all day.
All right, dude, you're the man. We're so proud of you for your new beautiful home and your new mudroom. And I got to tell you, that was a killer. Make the case. I got to look at that stock. Okay, mystery chart, and then we're gonna get out of here. I forgot what. Yeah. Okay. All right, the top pane. These are three charts.
I know what this is.
No hint. Wait, you're going no hint? You're gonna guess all three?
All right, let me just try.
No, and don't Google anything. Hands down.
Dude, hands up. My hands are up.
I can't see you. All I see is the charts on the screen. Okay.
All right.
Guess the trifecta. Guess the trifecta.
Audacious. Is this the Russell 2000, the value and the growth?
Sad trombone.
No, damn it. All right, go ahead.
I wanted you to do it.
I got too ambitious. I bit off more than I could chew. That's on me. Hand up. Hand up.
I wanted you to do it. I guess you're not really him after all. I thought you were.
What is this? Give me one clip.
The top pane is a sector, and panes 2 and 3 are the two largest companies in the sector.
Okay.
I think you could do this.
Okay, hold on. So it didn't take out new highs. I don't know, man. I'm getting nervous now. I'm a failure. I'm a loser.
I'm watching the chat to see if anybody's going to get it.
It's pathetic.
No one has it.
So what got absolutely kneecapped in March? Well, everything did. And these are the two largest stocks?
Yeah, the two largest stocks in the sector, and on top is the sector spider.
All right, I'll just go with XLY, Amazon, and Tesla.
I'm sorry.
All right, what is it?
The reveal, please. John, if you please. So this is the energy sector, XLE on top, ExxonMobil below it, and Chevron below that. They're all the same chart. Obviously, these two companies make up a huge proportion of the XLE. They all look the same. And here's my question to you. What happens when they get back to that cliff from March? Do they get turned away? Or is that the biggest breakout for energy stocks in 5 years? What do you think? What's going to happen?
I really am a
chart back on?
Ninny muggin. Let me see. Hold on.
Dude, look at this. Dude, look what's setting up here.
I'm looking. That chart visual is not great. Oh, yeah, all-time highs.
All right, we have individual charts. Let's just roll through them really quickly.
Okay, yep, going.
It's going, right? Okay,
yep.
I agree. Golden Cross in the XLE, we like it. Next chart. Ooh, Golden Cross and ExxonMobil.
Oh, man, I should buy this.
About to take out overhead resistance. This is the one the next one I actually own, Chevron. I'm long.
No,
size.
I like some better.
CVX, yeah, but look at this gap fill coming up. It's gonna happen. It's gonna happen. Yeah. We're going to 170 on Chevron. Massive Golden Cross happened here about a month ago, and this stock just will not look back. I think they could all work. They should all work together if they're going to work.
Looks great.
And I'm dying to see what happens at that March cliff. I can't wait. I'm anticipating that happening sometime around year end.
What is this Barry bullshit?
You remember that little Exxon? All right. Guys, thank you so much for watching. I know we went a little long tonight, but it's only because we love you so much. Really appreciate all the shout outs in the chat. Make sure you follow the channel, for God's sake. If you want the trucker hat, go to idon'tshop.com while supplies last, and I can't guarantee that. So hurry up, and we'll talk to you soon.